Welcome back to Teshkid FX for another Polygon Matic price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Polygon Matic. And before I start the video, make sure that you give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to start the video here on the daily chart by first giving you a recap of what has been happening and also give you whatever I'm expecting on the long-term scenarios, where you can see that Polygon, from these low prices that we had been trading within, we saw a very nice bounce to the upside, making it to an all-time high at around the $2.9 mark, and completed the formation of that higher Elliot wave count 1 to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing no prices in this ABC corrective structure, which took us back to around the $0.32 mark in what I'm terming as a higher Elliot wave count 2 to the lower side. And after seeing the formation of a higher Elliot wave count 2, whatever we expect next is a bounce to the upside in the formation of a higher Elliot wave count 3. And using the trend-based Fibonacci, I have sketched out a minimum target area to the upside in the formation of this wave 3 at the Fib level 1.618, which perfectly lies at around the $5.0892 mark, and that is the minimum that I'm expecting Polygon Matic to do on the long-term scenarios. And jumping to the 4-hour chart for further analysis and also give you the short-term scenarios that I'm expecting to play out. Here on the 4-hour chart, you can see that I have this Elliot wave structure in blue, which is a fractal wave within the formation of that higher Elliot wave count 3, and that is so because the wave 3 to the upside is an impulsive wave, and we expect to see fractal waves in formation within that higher Elliot wave count 3. And getting a little bit into the details of the formation of this Elliot wave structure in blue so that it can give us the short-term scenarios, I believe we have seen the high for this first wave of that Elliot wave structure having made its peak at around the $1.3 mark, and that is after seeing this 5-wave structure to the upside of this Elliot wave structure in yellow, having the wave 5 completing the formation of that higher Elliot wave count 1 to the upside. And now my primary scenario is that we are seeing the formation of this second wave, which is a corrective wave, and because of its corrective nature, we also expect to see an ABC corrective structure play out within the formation of that second wave, and that is what is going to give me the short-term scenarios. And over here on the charts, you can see that I have this ABC corrective structure where I'm terming this as the wave A. Then whatever we are seeing, that is whatever we saw making its peak at around the $1.05 mark yesterday, is what I'm terming as the high for that wave B. And I can also extend the wave A low to that point over here, because the low for that wave A is at around the $0.73 mark. Then this peak is what is giving us the formation of that wave B, before we continue pushing even low in the formation of this wave C to fully maximize the formation of that wave 5 to the lower side, and sketching out and getting to see whether this wave B has done the minimum that we expect a wave B to the upside to do, by connecting the Fibonacci's from the high of that wave A and then dragging the fibs to the low of that wave A, and that gives me a minimum retracement area to the upside in the formation of this wave B between the fib level 0.5 and the fib level 0.618 and the fib level 0.382, which lies between the $1.09 mark and the $0.9572 mark, which is a target area that we fully maximized yesterday by making our peak at around the $1.05 mark. And there are chances that we might have seen the peak for this wave B, and that there are chances that whatever we are seeing at the moment in this retracement might be the start of this wave C to the lower side. And for this wave C to play out, we need to lose the key area of support at around the $0.95 mark, and once that happens, then I will expect to see a retest of that key area of support. And once the retest is in, then we can continue pushing even lower. And because the wave C to the lower side is an impulsive wave, I'm also expecting to see a 5-wave structure in formation within that wave C, having the wave 5 of that 5-wave structure to the lower side, fully maximizing the formation of that wave C, and also fully maximizing the formation of that higher Elliot wave count 2 to the lower side. So that is what I'm expecting to play out here on the short-term scenarios. And you can also note that we are trading above the 20-day MA, meaning we have the support of the 20-day MA, and for us to continue pushing even low in the formation of this wave C, we need to lose the 20-day MA for us to continue pushing even lower. And also taking a look at the indicators to see what movements will be supported on the RSI. On the RSI, we are trading at around the 61 mark, meaning we have massive room for us to support any movements to the lower side before we get into the oversold region. Also, taking a look at the MACD, we have printed a bearish cross, and we are yet to see that increase in the selling momentum. So let's be patient and see how that plays out, and once the selling momentum increases, then we can continue anticipating lower prices here on the Polygon Matic chart. So let's be patient and see how that plays out, and I'll keep you updated.